What entrance music? So great to be here at TOKEN2049 Dubai. Thank you for having us. My name is Amanda Cassatt, aka Amanda.eth on Twitter, and excited to be the moderator for our incredible emerging markets panel. I thought perhaps we could, to get started, just go around and each introduce ourselves. I will begin. I'm the founder and CEO of Serotonin, the largest Web3 native marketing firm. Before that was Chief Marketing Officer at Consensus, where we built the first Web3 marketing team and brought Ethereum, as well as MetaMask, Infura, Truffle, Gitcoin, and many more to market. Next.
Hi, Amanda. Pleased to be here today. My name is Matthew. I'm the managing partner of Ryze Labs. We invest in primary and secondary markets all around the world, and we represent our invested portfolio company in emerging markets, everywhere from China and India to Brazil and Singapore and many places in between. Pleased to be with you and the panel today. Thank you.
Jehan.
Hi, I'm Jehan Chu. I'm the founder of Kenetic. Kenetic was the first really institutional money in Hong Kong in crypto, dating back to 2016. I've been in the space since 2013. We've invested in over 275, coming up on 300 companies, seed investing in companies like Solana, Polkadot, Ethereum CrowdSale, WorldCoin, and many, many others. Very excited to be here and excited to talk about some of the opportunities, more about the opportunities for emerging markets.
Awesome. Martin Carrica, founder of Mountain Protocol, yield-bearing stablecoin. And I'm from Argentina. We clearly are one of the leading countries in crypto because we need it. And yeah, been in Bitcoin since 2011.
So you've already mentioned Argentina, but I was hoping just to get started, we could draw a mental map for our audience and talk about which countries in particular in the developing world are adopting crypto. And maybe each of us could pick one or two to focus on. Wherever we want to start.
Sure. So if you look at the top of the adoption charts, you see probably Nigeria, India, and maybe even a country like Vietnam. To me, India, though, is still one of the most interesting, and that's for a couple different reasons. So first of all, it's one of the youngest large countries in the world. So there are 1 billion plus people, but the average age is something like 28, 29 years old. Secondly, it's an extremely digital savvy nation that already has digital financial rails, UPI, which people are accustomed to. So in that sense, the entrance fee in terms of understanding digital payments is substantially lower than countries that are still more cash-based economies. And then the third thing, which actually maybe I saved the best for last, is that as I think many of us know, it has one of the most substantial and impressive classes of developers of any country in the world. And I think before 10 years, 15 years ago, people might have thought of that as, okay, they're going to be the back office for Microsoft or something like that. And man, those days are over because they are really here to do big things. Maybe last generation was talking about how people from emerging economies that live in the United States are overrepresented in the C-suite. But now it's going to be how emerging economy leaders are overrepresented, still back in their own countries doing amazing things, leading their own companies that they themselves founded.
I think there's a couple ways to think about emerging countries. One is obviously in terms of innovation and being on the bleeding edge of the actual use of the technology. And of course, Latin America is exciting because there's so many different experiments that are kind of born out of the necessity of needing to kind of transfer money. But at the end of the day, I think it actually just boils down to a numbers game. And if you're talking about numbers in terms of population, I think you're really just talking about India, as Matt said. You're talking about China, and you're talking about Indonesia. I think these are the three most important markets. And Matthew's already talked about India. Indonesia, I think, is kind of slower to come to the fore, but I think that it's going to be very important because they have a digital mindset with a lot of the kind of super apps like Grab, and I think that crypto will be very important there. But I want to talk about China for a second because I think China is a bit counted out of the equation because of the whole restriction. And of course, we're at Token 2049, not Blockchain 2049. But in reality, China still has a very interesting ecosystem for blockchain technology. And I'm not talking about developers who are working on crypto projects in China, but not actually working on crypto projects. I'm actually talking about what the government is doing in terms of deploying blockchain technology for things like digital ID. Actually, the Chinese government and a lot of the kind of regional governments are very, very quickly and very, very, I think, nimbly deploying non-cryptocurrency blockchain technologies. And one of our portfolio companies, BSN, is actually at the forefront of helping to develop some of these uses. And I think digital ID is actually going to be one of the biggest. Obviously, everybody talks about the ECNY and the kind of digital CBDC. But I wouldn't kind of leave blockchain technology out of the equation about emerging markets, because when it comes to numbers, you can't really count China out.
Super interesting. Blockchain without crypto. What do you think, Martin?
So I think in terms of numbers, definitely Asia is the biggest. I think Argentina, to me, is very interesting, not on the numbers perspective, but in terms of like at the bleeding edge of adopting new stuff. So if you're World War II and you're going to invade Europe, you're going to enter through the easiest path, which is Normandy. In crypto, if you want to solve financial needs for people that are really in need of those financial products, Argentina is probably in that limit. And my grandma, she's 87. She uses crypto monthly, like at least probably once a week. She keeps her finances in US dollars in crypto because intra-month inflation is usually above 10% per month. Yearly inflation it was 300 on December, now it's coming down. I think people don't trust the banking system. We had a Corralito in 2001. No one trusts dollar deposits in a bank, even though you can have them. They're not worth the same as a dollar in your pocket. So there's dollar-denominated loans or even peso-denominated loans collateralized by crypto happening in Argentina. So I think as a market, you see solutions coming to real problems that people have a lot earlier that those solutions are needed in other markets. So I think ruling out, seeing what's happening in terms of the innovation leaves you kind of in the back end of the curve.
So, go ahead.
I just love the comments about Argentina, because I was thinking about prior to the panel, and I was thinking about some of these emerging economies, and Argentina is probably a really good example of this, where if you think about where is the actual use case for taking your monthly salary and putting it into stable coins rather than fiat? I mean, that's what these hyperinflation economies is the actual use case for that, right? Far more than say the United States, as much as we like to talk about, the dollar eroding over periods of many years. And then also, really, what we're talking about, we always talk about crypto as a kind of trust machine, and it's these emerging economies, frankly, that very often are lower trust societies, and they're just so much more incentivized in many ways, I think, to adopt crypto, which is why we're seeing them at the top of so many adoption charts.
And let me add one more. So if you think about, I think convenience is one that. In
Right.
crypto, we talk a lot about the UX,
Yeah.
but if you think about buying US dollars from the black market, or we call it the blue market in Argentina, you have to go to what we call a cueva, which is a store. You're going to give pesos. They're going to give you dollars. Are they counterfeit? Are they not? What rate are they going to give you? You're going to only find out when you get there. Is it the best rate? Whereas in crypto, it's just an app. You swap. Like my grandma can do that in the safety of her house on a Saturday. So it's like, I feel like crypto is turning financial services from going to a shopping mall to an Amazon, right? And that UX experience, we still have a lot of work to do, but it's still, in emerging economies, it's substantially better than the traditional
I actually
finance
think
system.
going on this, the work that needs to be done, I think the panel right after us is Pavel Durov and Paolo Arduino from Tether about to make a big announcement. I'm sure we all know what that announcement is going to be. I mean, I think these types of things are actually going to really kind of ramp up and accelerate the work that we have to do, because there's 900 million monthly active users in Telegram, and at once they're all going to be able to use have a native crypto wallet with potentially a native stablecoin. And I think these types of things will actually get us to this idea of the ubiquity of kind of capital availability and on-ramps and off-ramps really being the last frontier of kind of friction for a lot of these developing markets to actually have access to capital.
So I think this brings us to an interesting point. Crypto is being adopted in the developing world for its actual product market fit use cases and serving as a financial lifeline. Whereas, as we spoke about on the previous panel, in the post-industrial world, a lot of crypto is speculation. And so curious if you each have a take on which Web3 technologies in particular are the ones being adopted in the developing market, because they're actually sometimes different technologies than the main ones that people in the developed world are focused on. Maybe.
I do think there's some nuance there. I just want to point out that I do think it can be a combination. It's almost like a barbell situation in some of these countries where there's a combination of crypto being used for real use cases in a more fundamental way, along with speculation to a degree that is almost unimaginable.
Axie
So
Infinity,
it's really
right?
both sides.
Axie Infinity, like all these things take off, yeah.
Yeah. So it's almost both extremes. I think probably China can be a good example of that as well. Mainland China, where you have people that, where you have gray market economies. We're just talking about USDT. You have gray market economies with people transacting on the Russia-China border or other borders using USDT, which is, even though it's gray market, that's a real function. And then you have speculation that is, I would suggest it's significantly more intense, for lack of a better word, than even in the United States with some of these meme coins. So I just wanted to first mention that. But then in terms of actual use cases, one of the most obvious ones, for example, has always been remittances. And in fact, I couldn't help myself. The taxi driver, when I landed, I couldn't help myself. So I started asking him about where he's from and things like that. And then somehow, I guess he said, well, why are you in town? I said, crypto. And he actually said that he uses crypto to send money back home to Bangladesh. Yeah. So I think there are remittances as a great example where there's a very, very obvious crypto use case. Only caveat is that the neobanks are actually catching up quite rapidly in this as well. So there's a little bit of an arms race for non-crypto Rails neobanks. Just some initial thoughts.
Yeah, I would agree with that. I mean, it's a boring answer, but it's payments. I think payments, it's just, crypto makes payments easier, better, more efficient, creates more types of surfaces to kind of touch things. So I would imagine that it's payments. And then it's other things that are already popular. It's gaming, it's culture, the easy ones. I think in some ways it's less about, what is crypto doing well in these emerging, what types of use cases is crypto doing well? And the other way is to think about it is, what are the biggest use cases that crypto can really, help, reduce friction or reduce cost or make more accessible? So yeah, it's payments.
To me, it's stablecoins and the ecosystem around stablecoins. So it's mainly USDT, it's low-cost networks, Tron, mostly Polygon POS, and it's services around stablecoins. So that's remittances, B2B payments, savings accounts, or just self-custodying assets as a B2B. It's escrow accounts using your USDT as collateral for a local currency loan. I hope we start seeing Forex start to happen more on chain. It's something I've been excited for a while, and it's been taking longer, mainly due to the lack of local stablecoins. But I think stablecoins is the name of the game in emerging markets.
I would so strongly echo that. Stablecoins are very seriously underrated as cryptos. I would argue first real absolute home run product market fit is stablecoins. And if anyone ever pushes back and says crypto has been around for so many years, what's an actual example of PMF? Man, just go through the stablecoin use case, and it's just absolute home run.
The fact that you can send value on chain to anyone, anywhere,
Right.
is a complete product market fit innovation
Absolutely.
with crypto and blockchain that already is getting so adopted.
Absolutely.
But I'm curious, with the prevalence of these USD-pegged stablecoins in all of these emerging markets, are we basically seeing USD-pegged stablecoins replace small market cap currencies in these emerging markets? Is that a good thing? Is it an export for US dollar denomination?
I don't know if they're replacing it yet. I think it's still a little bit too early. There's a couple of factors that need to be kind of revealed before we can really say that they're going to replace. Obviously, the first is, will the U.S. government start to regulate and put the brakes on some of these kind of USD-backed stablecoins? And if so, what types of rails or what types of hammer band will they put on it? Will they continue to be allowed to exist, first of all, in the context of the U.S. market? After you get past that, let's say they get to be allowed to exist, what kind of local regulation will there be in the countries that are most affected by it? And I think that goes down, obviously, to each administration in each country. So it's definitely possible that they could, and they probably will, but I just don't know. There's so many uncertainties because we don't even know whether or not, will Tether be once and for all, kind of targeted by DOJ? Like, of course, they're on the radar. There's curveballs like other types of regulated stablecoins. Like, will USDC kind of continue their campaign to try and ring fence the U.S. market for themselves and box out some of these kind of foreign USD stablecoins? We're investors in FDUSD, which is the third largest USD-backed stablecoin, which is actually a licensed Hong Kong company. So you actually have these external foreign-backed or foreign, domiciled stablecoins, which also are entering the mix. And that's just in like the first inning, right? Most people are still not using stablecoins. What happens when we get to second, third, fourth inning, and you have large players like BlackRock and their BUIDL, which are also trying to become like a viable stablecoin in a way. So it's very early to kind of see what's going to happen, but it's exciting.
I think if you leave it to the free market, people would rather hold dollars than Argentinian pesos, than Turkish lira, than nairas. I think the market is like the water. It always finds its way to do what it prefers. And stablecoin reduces the friction significantly to access a product that people already want. So I think it's undeniable that there's substitution between USD and local currencies. And some see it as a strength of the dollar, and it weakens local governments and so on. I personally see it on the other side. The person who is exiting their local currency is exiting getting crushed by the lack of proper management of the government. I think it's unfair that my grandma has to buy stablecoins because the government cannot manage the Argentinian peso. So I'm all for it. Let's go dollarize.
Yeah, so I think let's be clear about what it's currently replacing in emerging economies. It's currently replacing people hoarding gold bars and money that they bought on the black market that they stuff somewhere. For the most part, that's what it's currently replacing. In many of these emerging economies, especially hyperinflation or strict capital control situations, things like that. Whether it will grow from there and how is still a little bit of an open question. And you have to probably frame that in the context of United States dollar hegemony worldwide being on the decline. But I really agree with your kind of paradigm about open and free markets, and the water's going to flow kind of where it's going to go. And I think that aspect is super healthy.
It's interesting because what that actually does is pulls back the curtain that actually the currency, like the national currency of a country, is actually a service, like any other service, water, electricity. And if the government sucks at providing that service, and people are actually opting out for another, USD, then maybe they shouldn't be doing that service, and maybe they're actually going to be competed out of the market. And so it starts to kind of really pare down what and streamline what the role of government is, and them existing as like a competitive service in a kind of quasi-network bundle of, network state bundle of services.
Which is also why many governments freak the actual fuck out, excuse my language, about crypto. Because this is not just finance, it's not just technology, it's finance and technology together that in some ways is a very direct competitor to government services.
Absolutely.
I do think it's super fascinating that this is USD pegged. And you make that comment about the quote unquote US hegemony diminishing, and yet the prevalence of USD denominated stuff, considering stablecoins, seems to be broadening.
Sure.
Which I think is interesting here. Then the other phenomenon you see is some of these governments are starting to put floating cryptocurrencies on the balance sheet. I guess my question is, are there any negative potential repercussions for any of this in emerging markets? What happens when the bull market is over? What if some of these floating tokens crash? What if people are playing games and start to quit their real jobs and depend on those games for their salaries, but then suddenly they can't get paid out? Are there any worries about the degree of adoption?
I think it's a huge issue. Second part last, for example, especially to the extent that these token economies and token projects, especially to the extent that they can be local or regional, for example, with the impact of Luna on South Korea, every cycle, our importance to real economies gets substantially bigger than the previous cycle. Even last cycle, the damage to South Korea from Luna was really quite considerable, number one. And then number two, I understand that this opinion is probably not popular in this room, but I think putting floating crypto assets, I think governments should not be in that business. I think it's adding a very substantial amount of risk to the economy if governments are holding sovereign wealth in the form of Bitcoin, for example, as El Salvador is famous for. I think it's a genuinely terrible idea. It's going to substantially increase the extent to which local economies will have booms and busts. That we're all familiar with how devastating booms and busts can be in the crypto economy, right? I don't think it's a super great idea to extend that to national governments. Let me put it that way.
Yeah, I think it's, unfortunately, it's the developing world, and particularly Global South, that typically foots the bill for a lot of, the kind of excess in the kind of modern world. So it's sadly inevitable that a lot of developing markets and a lot of the people in them who are generally, not as educated, don't have as much access to education, and will ape into a lot of this stuff. I think it's fair to say that the crypto market is still very much a casino rather than a bundle of services. And yes, everybody gets to play in the casino, but I think that developing world tends to pay most of the debt. So yes, it's a bit worrying, and it's really sad that without enough education for the people who are going to be using these services, along with the stable coins, along with the payments, along with all that kind of stuff, they're also going to be aping into meme coins. They're also going to be kind of going into, the BitConnects and the OneCoins of the world, and not knowing the difference between Tether and BitConnect and a scam. And it's sad. But to be fair, it's not just crypto. I mean, obviously there was the whole Vietnamese real estate scandal, $37 billion that was scammed. Like 1% of the entire, or 2 or 3% of like the entire country's GDP was
just a few
was
weeks
scammed.
ago.
Yeah, just a few weeks ago.
Crazy.
So again, it's developing world, and it's not just crypto, but yes, because crypto moves faster and it's more accessible, all the things we like about it, it actually punishes developing world the most.
Martin, what do you think about this? Is there anything to be done about it?
I believe in freedom, so I think people should be able to do with their money whatever they want. I think governments should embrace crypto and try to put stamps on regulating products that should be regulated. I think stablecoins are bank deposits. They should be regulated. I think an exchange should be regulated. They cannot rehypothecate customer assets. I think custodians should be regulated. Outside of that, like pretty much open. If you want to gamble, go on with it. I think people in emerging economies are used to adapting. I think there's pain, but there's also lessons. So I very much believe in the free market, and we iterate and learn. I don't think governments should be in the business of running hedge funds. So I think holding BTC, might as well pay down your debt and help future generations, have flexibility to take more freedom. So yeah, I think with your own money, do whatever you want. With someone else's money, you have to be very responsible.
I want to clarify my remarks just now, actually. Here's what I think. If you talk about Norway, they have the largest sovereign wealth fund in the world. Not an emerging economy, but it's a good example, right? So if you talk about Norway and you say, does it make sense for their enormous sovereign wealth fund, or Singapore's or whomever's, to have 1 or 2% of the total amount in crypto assets? Yeah, sure, that makes sense to me. There's reasonable arguments for why that super makes sense. On the other end of the spectrum, it's a spectrum, right? On the other end is, should a country like Honduras take all their dollar reserves and cash them in for Bitcoin? This is a genuinely terrible idea. They will very significantly increase the volatility of that country's economy. So it's kind of a spectrum, but you know, the more extreme ideas that I tend to hear, I would really caution against those, basically. Hope just to clarify a little bit.
Yeah, so we've covered the potential effect of the crypto market and the participation on these emerging markets that are starting to adopt crypto, either as stable coins for payments or putting crypto on the balance sheet. But what about those markets themselves and their impact on the overall crypto ecosystem? What if we flip it the other way around? Like at Serotonin, we see so many projects, and until pretty recently, very few of them were actually trying to market to developing or emerging economies. And the reason for that was because the actual amount of value being transacted per capita is really low, even if the actual saturation ends up being pretty high. And so what, if any, impact do you think people can expect for more adoption in the emerging markets to have on the macro crypto market? Is this something that we can expect to change prices, charts, which projects are successful?
I mean, it's true that in the United States, I still, if I recall correctly, it's still the leader in aggregate flows in crypto. But India is number 2, and that's just for money that you can actually track on chain. And if you look at money coming in through VPNs or God knows what KYC, I'm very confident China would be way up there as well. I think people are very substantially underestimating how big these markets are in aggregate. Part of that is because they don't always come in through the normal doors. I think there's already a track record that we've seen about projects who lean into this that can really take off. I mean, you know, Axie Infinity in Philippines is an obvious example that we all kind of know about, but there are many of these. There are many. I mean, even if you look at, I think a lot of times people are confused trying to figure out why is Binance Smart Chain so big? Well, it's because they have perfect PMF for China. When they went hard for go-to-market with China. A lot of these projects, if they can nail even one of these small emerging economies, that is absolutely going to make their project. That's easier said than done, but I absolutely think most projects are very significantly understating how enormous emerging markets can be in terms of their success.
Yeah, we see this with BNB, with Tron, with some other projects that folks from the developed world are sometimes surprised are so large, and the answer is emerging markets. Jehan, curious what you think here.
Yeah, it's like what I was saying before. It's just a numbers game. I mean, the largest populations are in, you know, kind of developing world, and I think it just goes back to that. I didn't think we've really even started to see the impact of that because generally crypto has so much friction, so many UX issues, that it's hard for the vast majority of people to get on board. But once things like Telegram and others smooth that out, I think there will be a deluge of utility applications, and I absolutely think it will move the charts in terms of, you know, how much crypto is used, you know, transactions like on chain, everything. I think that we just don't. As Matthew said, we kind of underestimate it. There's a language barrier, there's a culture barrier, there's like a kind of a Western, you know, blind spot to kind of developing world in terms of being interested in those markets. And so a lot of stuff is happening under the surface, but a lot more is kind of just beyond the horizon.
I would flip it. I think there's also the impact that emerging markets builders are having in the global market in crypto. So Open Zeppelin is Argentinian. The central land is Argentinian. There's hard hat, we all use it, Argentinian. So there's like builders, because they live in these economies, they use these products. There's hundreds of thousands of developers in Latin America that get paid in crypto daily. So they are playing around with crypto and building stuff to solve their problems that address a global market. So I think emerging markets are not only a market, they're also exporters of technology globally. And I think we'll continue to see that. I think you talked about India. I think India is also a massive exporter of crypto technology, and super exciting to see that.
Yeah, can't overstate the impact of the builders, right? Because a lot of the big, expensive infra projects come from deep capital markets areas like the States. But then you see a lot of the actual applications and games being built in markets where it's more affordable to rapidly iterate. Is that something you've been seeing?
Absolutely, for sure. And additionally, I think it's people very seriously underestimate, if you look at the anons that are hotshot developers and it's not publicly known who they are, or anonymous projects, I think people very seriously underestimate. I mean, think about the reasons why it would be very important to someone to be anonymous. Certainly one would being in a country where it's a little tricky. Maybe that's Nigeria, maybe that's India, maybe that's China. There could be lots of different reasons, lots of different countries. But a shockingly high percentage of those anons are from places like those. Way higher than you'd think.
Yeah, it's been fascinating seeing all of the builders in places like Ho Chi Minh City, Jakarta, Manila, a lot of the cities in India, and kind of the differentiation between what's being built there and some of the big infra coming out of the more kind of capital markets driven places. So a lot of folks here are investors, market participants of various sorts that may or may not be focused on what's going on in emerging markets, and may or may not be exposed to some of these trends. How can folks here get involved? How can people here invest or participate in a way that takes advantage of this set of insights?
That's such a good question. It's a double-edged, well, okay, so it's a little bit paradoxical, is a better way to put it. Because if you compare it to TradFi, the information flow between West and East and the relationship networks, the connections are substantially less than in TradFi. The relationship networks have much less overlap. The information flow and information asymmetry is much higher. But the paradoxical aspect of that is that really it's kind of an effort thing. And half of us are on Twitter, even from countries where Twitter use is restricted to some extent. So many of us are on Twitter or Telegram or in Discords and things like that. Like Google Translate's pretty sophisticated, and most of these people speak English anyway, to be honest. You can just get out there and start talking to people and really start to learn a lot. So paradoxical, the information asymmetry is tremendous, way more than in TradFi capital markets. But you can really break that down much more than you think just by making an effort, really.
Yeah, it's a tough one because I don't know if the world works in a way where it's good to just kind of try and invest in an emerging market anymore. I mean, it's so much, at least if you take a snapshot of today, it's so much about narrative, and it's about, is it modular, or is it like, kind of Bitcoin layer 2, and, investing. If you're just talking about investing, I think those are kind of maybe more relevant ways of thinking about it. If you want to invest in terms of, output, and you're talking about developers, then that's quite obvious. Then, if you want to invest kind of culturally because you're interested in, how to kind of uplift people and kind of really create solutions, then obviously that's something more like going there and spending time and actually understanding the needs and wants of the actual local people rather than kind of imposing different types of solutions. So I think it depends on what you want to do. I think it's interesting the types of opportunities that come from the developing world, but from a pure investment standpoint, unless you're really spending the time to be there and absorb and really try to understand, I think it's quite tough just to kind of, think about it as like as a sector to invest in, as you might do, say, in the public equities markets.
But what about in your portfolio, though? Are there particular investments that you've made that you feel are particularly aligned with growth in the emerging markets?
I mean, we're investors in TON, which is Telegram's blockchain, and I think that is something which is completely aligned with advancing access to crypto and services in developing markets. But it's not specifically any one, right? It's something which kind of crosses over. We're investors in Chingari, which is a social media application in India, one of the top 5. But while I think that, and that was, to be fair, that was an investment that we made like over 2 years ago. And that was more of like a regional play. Going back and thinking about it, I don't necessarily know if that's the best way to kind of think about investing in those types of markets where, earlier on you had, in the very, very old days, I invested in Icon and Qtum, and Icon was like Korean ETH, and Qtum was like Chinese ETH, and all these kind of historical projects. But I don't think we're there anymore. I think everything is so mixed and everything is so kind of dispersed. All of our teams are like, where are you? Where are you from? Like, I don't even know your name. What country are you in? Doesn't really matter. So everything is just much more mixed.
I think to invest in emerging economies, I think you need to spend a lot of time. I wouldn't discourage people from visiting places and seeing people use crypto in a different way than in the Western world. I think you get to learn a lot by just spending a week in Buenos Aires or Hong Kong or Manila. I think visiting and seeing why people do what they do and understanding why USDT on Tron is so big. If you don't go, it's very hard to do. And it really opens your mind and to understand like why these blockchains are massive and why these use cases make sense.
So super lightning round before we wrap up. Curious, it's prediction time. If each of us could quickly think of a surprising, interesting prediction about what's going to happen in the emerging markets in the next, let's say, year or so. What are people going to see happen?
I'll go first. I don't think it's going to be a year. I'm going to drop a decade. But I think the next reserve currency is, like we talked about the dollar and the issues the dollar is having. I think the next reserve currency is going to come from countries like Argentina and Turkey, and it's going to look like a
global reserve currency.
Global reserve currency. It's going to be a multiple global reserve currencies, but they're going to be set issuance reserve currencies pushed by the government with a set issuance per year. And we're going to have many, but it's going to come from emerging markets, whether it's Argentina or it's Turkey. We don't know which one. But between dollarizing and doing that, today they all dollarize. At some point, one is going to try that. And I think it's going to be very successful.
Yeah, I think I'll kind of take that as well, maybe more of like a 10-year period. I think it's actually the unbundling of kind of like national identity and sovereign identity, unbundling it from the geography that you're born in into like really just a bunch of services. Like it is kind of like this network state thing where, it doesn't really matter where you're born. I was born in the US, lived in Hong Kong for many years, but I'm half Filipino, half Chinese. What am I? I think I'm probably much more a bundle of like the services that I use as a consumer of government kind of like, utilities, as well as those consumer things. So I think that we start to transcend a lot of the kind of ties to national identity for how we use these services. We still maintain the cultural side, but even that I think is becoming much more sadly homogenized as we kind of travel.
Currencies as bundles of services.
Modular identity, yeah.
It is. It's modular nationality.
Yeah.
Certainly one thing that comes to mind is if it continues to play its cards right as it has recently, Hong Kong does have an opportunity to be substantially more important to the crypto economy than it ever was for the TradFi economy, even at the heights, which was quite substantial. So that's one thing that comes to mind.
Fascinating insights to end on. Thanks so much to our incredible panelists, and thank you to our audience.